Imagine a startup so aggressively ambitious, it promised to overthrow the biggest coffee empire on Earth. A company that didn't just grow fast, but shattered every known record to reach $1 billion valuation. The mastermind wasn't a barista or a coffee lover, but a ruthless serial tech entrepreneur from China. He didn't want to build a cozy cafe culture. He wanted to build a cold, calculating technology machine. His target was the undisputed king of caffeine, Starbucks.
And for a brief, shining moment, Wall Street believed he was actually going to do it. American investors aggressively threw billions of dollars at his futuristic vision of retail. But behind the explosive growth and the endless stream of blue cups, they were brewing a massive lie. A financial deception so bold, it literally forced the United States Congress to change the law. This is the insane true story of Luckin Coffee and how China scammed the American stock market. To understand this massive $310 million illusion, we have to look at the battlefield. By 2017, Starbucks had absolutely conquered the Chinese market, practically monopolizing premium coffee. But a Chinese entrepreneur named Charles Liu saw a massive, glaring weakness in the Starbucks model. Starbucks sold expensive coffee in giant, expensive lounges where people sat for hours. Liu decided Luckin Coffee would be the exact opposite. Small kiosks, zero cash, zero cashiers. You could only order through their app, and a courier would deliver it directly to your desk in minutes. To get people hooked, Luckin started giving away millions of completely free cups of coffee. They burned through hundreds of millions of dollars in venture capital, subsidizing every single latte. How do you survive when you are losing money on every single item you sell? Charles Liu convinced everyone that they weren't a coffee company, but a tech startup capturing data. The strategy was to grow so incredibly fast that investors would ignore the catastrophic losses. In less than 2 years, Luckin opened nearly 4,000 locations, a speed never seen in retail history. They weaponized the fear of missing out, convincing Wall Street that this was the next Amazon. Global investment banks like Credit Suisse fell over themselves to bring Luckin to the American markets. Everyone on Wall Street wanted a piece of the company that was finally dethroning Starbucks in Asia. In May 2019, Luckin Coffee rang the opening bell at the NASDAQ exchange in New York. They raised over $560 million in a single day, instantly making the founders billionaires. The stock price skyrocketed, pushing the company's valuation past a staggering $12 billion. But back in Beijing, behind the closed doors of their headquarters, panic was already setting in. The free coffee promotions were ending, and the real customers simply weren't coming back. Wall Street analysts were predicting massive profits, completely blind to the reality on the ground. The terrifying truth was that Luckin's kiosks were suddenly ghost towns. To keep the stock price artificially inflated, the executives needed to show hyper-growth. So, the chief operating officer, Jian Liu, orchestrated a brilliant, highly illegal plan. They created a massive network of shell companies, supposedly completely independent of Luckin. These fake companies suddenly started buying millions of dollars in bulk coffee vouchers. They essentially took investors' money, sent it to shell companies, and bought their own coffee vouchers. Then they manipulated their own back-end software to falsely log millions of fake customer pickups. To balance the books, they also invented $160 million in fake advertising expenses. It was a perfectly closed loop of imaginary money, inflating their revenue by hundreds of millions. Because on the surface, everything looked absolutely perfect to the American regulators. Luckin Coffee wasn't a miracle tech startup.
It was a rapidly collapsing house of cards. They were artificially pumping their stock price so executives could borrow billions against their shares. Every quarter, they reported impossible profit margins and spectacular customer retention. American retail investors poured their life savings into the stock, believing the hype. Meanwhile, millions of fake orders were being processed through servers to satisfy Wall Street. To maintain the illusion, the IT department literally wrote code to alter the sequence of receipt numbers. If order number 12 came in, the system would magically skip numbers and print order 25. Anyone looking at the receipts would assume the store had served double the amount of customers. The executives thought they had created the perfect, undetectable corporate crime. Elite hedge funds continued to buy the stock, entirely mesmerized by the beautiful financial charts. But they severely underestimated a ruthless group of financial predators known as short sellers. Carson Block, the founder of Muddy Waters Research, lived to expose corporate frauds. In January 2020, Block received a highly encrypted email from an anonymous source. Attached was a massive 89-page forensic report titled simply Luckin Coffee, a fraud. The anonymous researchers hadn't just looked at spreadsheets, they had done the impossible. Block read the methodology, and his jaw dropped at the sheer, terrifying scale of the intelligence gathering. The anonymous source had hired a massive army of over 1,500 people in China. This wasn't a standard financial audit. This was a highly coordinated, military-grade spy operation. And what they found was about to destroy a $12 billion empire overnight. This underground army of investigators deployed across 53 different Chinese cities. Their mission was simple: sit in Luckin coffee shops and secretly record every single transaction. They placed smartphones with hidden cameras directly facing the pickup counters of hundreds of stores. For months, they recorded 11,260 hours of raw, unedited video footage. Spies literally sat with stopwatches, manually counting every single person who walked through the door. Then, they systematically dug through the trash cans outside the stores to collect 25,000 physical receipts. The manual counting proved that the company was faking its daily orders by up to 88%. The receipt-skipping algorithm, meant to hide the fraud, was entirely exposed by the trash. Muddy Waters verified the video evidence, realizing that the company's official numbers were pure fiction. It was the most brutal, undeniably rigorous takedown in modern financial history. On January 31st, 2020, Carson Block tweeted that Muddy Waters was officially shorting Luckin Coffee. He released the full 89-page anonymous report to the entire world, entirely unedited. Panic instantly swept across the NASDAQ as algorithms processed the devastating allegations. The stock plummeted 20% in a matter of minutes as traders rushed for the exits. But Luckin Coffee's executives went on the offensive, violently denying every single claim. They issued press releases calling the Muddy Waters report malicious and entirely false. Surprisingly, several massive American hedge funds publicly defended the company. They claimed Muddy Waters was just manipulating the stock for a quick, dirty profit. Because of this blind faith, Luckin stock miraculously recovered much of its massive losses. But the clock was ticking because the company's official auditors had finally woken up. Ernst & Young, the global accounting giant, had previously signed off on Luckin's books. Terrified of a massive lawsuit, they demanded full access to Luckin's internal servers. They discovered the deleted chat logs on WeChat, where executives casually discussed faking the numbers. They found the exact internal emails detailing the fraudulent transactions with the shell companies. The auditors absolutely refused to sign the annual report, forcing Luckin's board to launch an internal probe. To make matters infinitely worse, the COVID-19 pandemic suddenly locked down all of China. Any real revenue Luckin had was instantly wiped out as their thousands of stores were forced to close. The executives could no longer borrow money to cover up the massive, gaping hole in their balance sheet. On April 2, 2020, the company had no choice but to release a catastrophic filing to the SEC. They publicly admitted that their chief operating officer had fabricated $310 million in sales. The moment the press release hit the wires, it triggered a complete financial apocalypse. Trading on Luckin stock was halted 6 times in a single morning due to extreme volatility. By the end of the day, the stock had crashed by an absolutely staggering 80%. Almost $5 billion of market value evaporated into thin air in less than 8 hours. In China, the news caused a bizarre, entirely unprecedented panic among the public. Millions of customers realized the company might go bankrupt the very next day. They rushed to cash in their free coupons, creating lines blocks long outside every Luckin kiosk. The massive surge in orders actually crashed the Luckin Coffee app nationwide. But for American investors and retirement funds, the situation wasn't funny. It was catastrophic. People who had trusted the Wall Street hype lost literally everything they had invested. The US Congress was absolutely furious that a massive Chinese fraud had easily bypassed American regulations. Because Chinese laws strictly prevented American auditors from inspecting companies on Chinese soil. It was a giant legal black hole that allowed companies like Luckin to literally invent their numbers. The scandal was the final straw, leading directly to the passing of the Holding Foreign Companies Accountable Act. This historic law threatened to delist every single Chinese company from US exchanges if they refused audits. The SEC officially slapped Luckin Coffee with a massive $180 million penalty. Luckin was formally expelled from the NASDAQ, its shares banished to the unregulated pink sheets market. Chairman Charles Liu and CEO Jenny Chien were completely stripped of their power and ousted from the company. Liu watched helplessly as his multi-billion-dollar fortune was violently liquidated by angry creditors. By late 2020, the financial world considered Luckin Coffee absolutely, undeniably dead. But then, something incredibly bizarre and entirely unpredictable happened in Beijing. The new management, free from the pressure of Wall Street, decided to actually run the business properly. They closed hundreds of unprofitable locations, fired the corrupt executives, and stopped giving away free coffee. In the ultimate twist of fate, the massive infrastructure the scammers built actually worked. They launched a massively viral product called the raw coconut latte that broke the Chinese internet. Young Chinese consumers completely ignored the Wall Street scandal. They just wanted good, cheap coffee. Without faking a single number, Luckin's real revenue violently exploded upwards. By 2023, Luckin Coffee achieved the very thing the scammers had originally lied about. They successfully opened over 10,000 stores, officially surpassing Starbucks as the largest coffee chain in China. The zombie stock, which had crashed to $1, quietly surged back up by over 3,000%. The Luckin Coffee saga remains one of the most paradoxical stories in modern financial history. It was an incredibly brazen fraud that accidentally built a legitimately dominant, profitable empire. But the massive losses suffered by the original retail investors can never be fully recovered. If you were captivated by this deep dive into the $310 million phantom coffee scam, let me know in the comments. Do you think the Chinese executives should have faced US prison time? Or were Wall Street bankers just as guilty for ignoring the obvious red flags? Let this history be your greatest financial shield in the modern markets. Whenever a company claims to have revolutionized a traditional industry purely through an app, you must violently question how they are actually making money beneath the surface. Luckin's case forever changed how global regulators view foreign tech monopolies. Today, the tension between US regulators and foreign exchanges remains incredibly high, meaning the very same loopholes that allowed Luckin to fake millions are still actively debated. Yet, despite the massive fines, new corporate illusions are pitched to investors every single week. Scammers now hide behind artificial intelligence buzzwords and aggressive overseas expansion numbers. But the psychological trick is always exactly identical to Luckin's fake receipts. They sell you explosive growth, impossible metrics, and a fear of missing the next big thing. The moment a CEO refuses to clearly explain their path to actual, sustainable profitability, that is your ultimate cue to turn around and protect your portfolio. Always demand independent audits, read the short seller reports, and audit the fundamental math. Because as history has repeatedly taught us, if the growth sounds too good to be true,
It almost certainly is. Make sure you hit that subscribe button right now so you don't miss the next epic breakdown. We are building the ultimate documentary archive of high-profile financial disasters. Click the screen right now to watch our massive breakdown of the Bernie Madoff Ponzi scheme. Or check out our episodes on Nikola, Theranos, WeWork, and the FTX crypto disaster. Share this video with a friend or family member to help them understand how financial fraud operates. Don't forget to give this video a massive thumbs up if you enjoyed the investigation. Your likes help push these educational documentaries to a much wider audience. Which financial scandal do you want us to cover in our next big documentary? Drop your suggestions in the comment section below. I read every single one. Thank you so much for spending your valuable time watching this video. Your incredible support keeps this channel going and allows me to create these deep dives. Stay smart, stay skeptical, and always protect your hard-earned assets. See you in the next epic financial crime breakdown. Stay safe, everybody. And always remember, no matter how revolutionary the app looks, make sure the business inside is actually real. Before you invest a single dollar in the next hype, always verify the math. See you next time.